Hey everyone, and welcome to Talk Tickers, where we dig into the earnings calls that really move the needle. And boy, did we have one of those with Dollar General. We're going to break down their Q3 report, which honestly sent a huge shockwave through the entire retail space. This wasn't just a beat, it was a major statement.
And, a statement like that, well, it looks a lot like this. Yep, a 14% pop in one single day. Look, for a company this big, that's just a massive, monumental move.
So that's what happened right after their earnings call on December 4th. The market just ate it up. Which leads us to the big question, right? What on earth did the leadership team say that lit such a fire under the stock? Well, that's exactly what we're going to get into. All right, so here's how we're going to tackle this. First, we'll look at the big numbers, the beat that really surprised everyone. Then we'll dive into the turnaround story, how exactly they pulled it off. After that, we'll cover management's guidance and the key themes for the future. Then we'll look at the market's verdict, how investors reacted. And we'll wrap it all up with our own rating in the next call. Okay, first up, a beat and a rally. Let's get right into the numbers behind this huge pop, because this wasn't just built on hype. No, this was a direct reaction to an earnings beat that, frankly, Wall Street just didn't see on the horizon. All right, check this out. The real story here is all on the bottom line. So revenue, yeah, that was pretty much what everyone expected, basically in line. But look at the earnings per share. The GAAP EPS came in at $1.28. The street was looking for 95 cents. That's not just a beat, that is an absolute blowout. We're talking more than a 35% surprise. And this chart right here really shows you the magic of operational leverage. I mean, think about it. This wasn't just a beat against what analysts thought would happen. It was a massive, almost 44% jump in profit compared to the exact same time last year. And get this, they did it on revenue growth of less than 5%. That kind of efficiency, making so much more money on just a little more sales, that's exactly what gets Wall Street fired up. So that's the what. Now for the really interesting part, the how. How in the world did Dollar General squeeze so much profit out of sales that were just fine? The entire answer, my friends, is all about the margins. Yeah, the whole turnaround story is right here. Their operating margin grew by 82 basis points. Now, part of that came from better markups on their inventory and this is a big one, lower shrink. And if you're not familiar, shrink is just the industry's term for stuff like theft and lost inventory. But the real key, the true engine behind all of this, more customer traffic. Simple as that. More people were walking into their stores. And you better believe management was shouting this from the rooftops on the earnings call. The CEO, Todd Vasos, he laid it out perfectly. He said traffic is the real measuring point. And you might ask, why is that so important? Well, think about it. You can always mess with pricing, you can sell more expensive stuff to make the average purchase bigger, but getting more actual people to walk through your doors, that is what tells you the business is healthy and has a sustainable future. Okay, so section 3, management, guidance, and themes. Because, look, a great quarter is, well, it's great. But what really poured gasoline on this fire was how confident the management team sounded about what's coming next. They didn't just have a good quarter. They told everyone the good times are going to keep rolling. This was a huge signal to the market. I mean, for a while there, Dollar General had been lowering its guidance, kind of managing expectations down, and then, boom, they completely flipped the script. They raised their forecast for same-store sales and, crucially, gave a much rosier outlook for their full-year profits. The message to investors was crystal clear. Q3 wasn't a lucky break. It's the beginning of a real trend. So beyond those big guidance numbers, there were a few other really interesting tidbits from the call. First, they're still seeing what they call a trade-down effect. Basically, shoppers with more money are coming to their stores to save a buck, and that's a nice tailwind for them. They're also getting smarter, more disciplined about opening new stores, planning for about 450 in 2026. And finally, they're taking all that cash they're making and paying down debt. Just shoring up the foundations of the business. Smart stuff. All right, next section, the market's verdict. So we've seen the numbers, we've heard the story, but how did the market, the actual investors, react to all this? Well, that big stock pop tells you a lot, but when you dig into the data underneath, you see just how much attention this report really got. Just look at this, an explosion of activity. The trading volume shot up to over 14 million shares on the day. To put that in perspective, that's like 3 or even 4 times what they normally trade in a single day. This wasn't just retail investors or a few computer programs jumping in. This was the big money, the major institutions piling into this stock with conviction.
And the verdict from the professional analysts? It was pretty much a standing ovation. The phrase you heard over and over was a clean beat and raise. In analyst speak, that's the holy grail. They saw this as a turning point, a moment where the stock could get what's called a multiple re-rating. All that really means is that investors are now looking at Dollar General and saying, you know what, this company is better than we thought, and they're willing to pay a higher price for its stock relative to its earnings.
And that brings us to our final segment, the next call. This is where we put our own analyst hat on and tell you where we think this stock is headed from here. So let's just ask the big question that's probably on your mind. After a run-up of more than 40% in the last year, has this stock just moved too far, too fast? Is all the good news already baked into the price? Has the easy money been made?
Well, our answer is no. We think there's more room to run. And our whole thesis really boils down to three key things. First, we believe these fixes they've made, cutting down on theft and managing inventory better, are going to stick. That's a real lasting boost to their profits. Second, as they keep proving themselves, that turnaround story label is going to fade away, and investors will be willing to pay even more for the stock. And third, that guidance they just gave us, it's a clear roadmap. It shows you the fundamental case for why the stock should go higher.
And it's for all those reasons that we are stamping our official Talk Tickers rating on Dollar General as outperform. We believe the momentum here is real. The traffic is back, the margins are under control, and this story has further to go.
And as always, just a reminder, this is not financial advice.